here to help you with that. And if you like that or that resonates with you, like and subscribe to this channel because that's what we're all about. Got Caleb Carney here with Middletown. Is it Caleb Carney State Farm here in Middletown, Connecticut? Or is it Middletown State Farm? What is it?
It's Caleb G. Carney, LLC, I guess.
Caleb G. Okay. And it is State Farm.
It is State Farm, yes, sir.
Making your bones in insurance.
Absolutely.
Love it.
Absolutely.
So wanted to have you on today because I've gotten to know you over the last month or two that we've been in a mutual networking group. And understand that you've just got a plethora of knowledge in the business of insurance. And maybe, you can give us a brief update on how you got to where you are. And, for the viewers, I'll put the plug in. He's got the biggest State Farm agency. Is it in Connecticut?
In Connecticut, yes.
Okay, amazing. And very well known in the area where we're in. I've known the name for forever, and it's really cool to be able to now get to meet you and work with you. So, if you want to tell us how you got to where you're at, and and then we'll get into what you think is important for people to know about insurance in the coming years, right?
Yeah, absolutely. So I got into insurance the way most people do is nepotism, right? So my father-in-law is a State Farm agent out in New Jersey, and I started dating my wife in college, and we were dating for probably a year, and he started talking to me about being a State Farm agent. So that's kind of how I got into it. I was, I have a lot of interest in real estate. I have a lot of interest in doing, carpentry work. But insurance and the idea of selling a policy, excited me. So I worked with him for quite a while, for 3 years, and then took over this opportunity here in Middletown in 2008. So I've been selling and servicing insurance policies in Connecticut for, 16 years now. So we've seen, we've seen so much change here in Connecticut with the insurance market. You see a little bit of everything here. Mm-hmm. So it's really nice that you get a pretty broad education on insurance and just different rules and regulations that are coming up. Okay. I like to do a lot of reading in regards to the industry. Like to talk to a lot of individuals who are out there, everybody from underwriting to underwriting to claims. Mm-hmm. I have a lot of buddies that are brokers, so we're always talking about what the market holds and what they're seeing in the market, and just really kind of educating ourselves on different products and different claim scenarios that are coming up that are unique, not only to Connecticut but nationally. So. But it's been a good run, and doing business here in Middletown has been pretty awesome. Really love the area, and Connecticut's a great place to do business. There's no doubt.
Sure, yeah, and like you said, Middletown specifically. The more I'm around here, the more I appreciate. Like I grew up, I didn't really appreciate what we had. So yeah, I've come to appreciate. Middletown it's a beautiful place. It's got a good, strong economy. It's, good for families, and you have a really diverse, cross section of people that live in this area, which is great for you.
Great for us, because that's, we get a little bit of everything here, which is, and I tell people this all the time, like, my day is unique. I really think to any other industry, because I literally could pick up the phone and be speaking to a multi-millionaire, and my next phone call is someone who's not making ends meet.
Right.
So it's you deal with all types of situations, and everybody comes at it, a little bit differently.
Yeah.
Depending on their background and their economic status. So
Cool.
we get all types of players.
Nice.
Yeah.
Now, I'm trying to think of whether I want to go condo first and then general insurance or general. Let's do general insurance first because I think that's going to be more relevant for more people, and then we'll
absolutely.
specify down into condos after or HOAs. The reason why I wanted to bring you on and what really triggered it was like, hey, I really need to. So Caleb and I are part of a networking group, and part of that format is we do a minute sales pitch or a minute sales pitch, and then just a rotating, was it 10-minute, 15-minute?
Yep, 10-minute presentation.
10-minute educational presentation, right? And you had yours this week, and I was like, that's really interesting. And I knew you had more to talk about because you were tied up in 10 minutes. I said, well, let me get him on the podcast because this is important stuff.
Absolutely.
And if we can share this with people, they're going to benefit, right? So maybe you can, give us the I don't want to say bullet points. Give us the meat and potatoes version of kind of what you briefly went over on Wednesday.
Yeah, absolutely. So I opened up and just told people, hey, I've been doing this for 16 years, and for 14 years, it was pretty easy.
Yeah.
The insurance market right now has completely flipped. And when I say that, I mean that let's talk about the home insurance market. The auto insurance market will take care of itself. Just in that, I think that as time goes on, inflation relaxes. People get used to the pricing that we're dealing with. Auto body parts are going to be a little bit easier to find, and supply chains are fixing themselves. So I do believe that will fix itself. The big problem that we're facing in the insurance industry, and we're seeing this nationally, but it's coming to Connecticut now, is the amount of natural disasters that we're experiencing in this country has really risen substantially. And companies are paying billions and billions and billions of dollars to handle claims. And they're handling them. It's not only happening, every 3 or 4 years. It's actually happening every 3 or 4 months that we're getting natural disasters that come through that are really affecting the market.
Yeah. Even we've had crazy rainstorms, like where it's over the course of a week, we're going to get 6 inches or whatever, like just nuts for this area.
Absolutely.
Right.
Absolutely. And, so when we look at this area, and, we used to worry about maybe having a tropical storm or maybe having a hurricane that made its way up, right? But the amount of other issues that we're having, like we're having microbursts coming through areas and doing damage to small areas, but they do significant damage to small areas. I think 2 weeks ago we had an earthquake. Right? So these are all things that are just brand new. They're not brand new, but they're happening more frequently than they were before.
Right.
And insurance companies we're really looking for ways I think the insurance companies are really looking for ways to be able to continue to do business based on the new weather patterns that are coming through. So, there's a lot of changes in the market that are coming down the road that are going to be, they're going to hit customers in their pocketbooks. It's going to cost more money to insure a home here in Connecticut than it has in the past. So we're seeing some different factors come through. That weather factor is a huge factor. So the amount of hailstorms that we're having is significantly greater. Like I said, microbursts. We've had some tornadoes. We haven't had any snow, which has been fantastic because we haven't had ice damming storms. But I read the other day that Connecticut is 35% higher chance than last year that we're going to get hit with a hurricane. So those are things that as an insurance company that we look for and that we need to really, we need to be able to plan for, plan not only to be able to handle those claims with manpower, but also handle those claims financially. So those are things that are coming up, and loss ratios that we've seen in the industry through the past couple of years have increased. So I'll just give you a number so from 22 to 23, our loss ratios at State Farm in the state of Connecticut, we had an increase of 23%. So meaning that we spent 23% more money than the previous year on claims, which is significant. I mean, it's significant. It was the highest increase since like 1965. So for what we had paid out on those, which is really eye-opening when you see that. And unfortunately, the trend in the state of Connecticut in 2004 is going to exceed that from what they had in 2003. So I think there's
24. You mean 24 to 23?
I mean, yes, 24 to 23. Yeah,
Okay.
Exactly. So I think that some things that are coming up that some factors in those claims are not only the natural disasters that we've had, but also we have things. Crime has obviously ticked up since past COVID, right? Yeah. So every time that a vehicle gets broken into, up in Rocky Hill, we had 52 vehicles broken into a couple weeks ago, right? So you not only have those glass claims that come from that, but you also have, that's a homeowner's insurance claim if your notebook gets stolen out of there, or not your notebook, excuse me, but if you have a laptop in there, a gym bag, right? Those are all homeowners insurance claims that come up, and though that increase in crime is really affecting loss ratios. The other thing that we've seen quite frequently is we have quite a few storm chasers that are coming up. When I talk about storm chasers, I'm talking about roofing companies that will go to an area that's had a weather pattern, and they will go and they will, knock on people's doors and let them know, hey, I see you have some damage on your roof. Your insurance company could take care of that for you. We'll set up the claim with your insurance company. Yeah. And I am all for one. I completely support, and I want my customers, if they have a legitimate claim, I want it to be paid out. So if you have a wind damage claim on your roof, I want us to take care of that issue. That's why you pay for homeowners insurance. But the reality is that a lot of these claims are not wind-based, and unfortunately, we're forced to pay out those claims. And it is costing insurance companies quite a bit of money, and insurance companies are in it to make money. And we're going to pass, unfortunately, we have to pass those expenses off to customers. Right. So customers who are doing a good job at maintaining their properties, they're doing a good job at making sure they're cleaning out their gutters, and they don't have those small claims that come about. But
and they're not making fraudulent roof claims.
Exactly, exactly. So when we talk about those roof claims, like what's the other problem with roofing materials? Anybody that knows that's replaced their roof recently, that roof that typically costs $25,000 to replace now costs $50,000 or $60,000 to replace. So that cost just from pre-COVID levels has gone up extraordinary. So inflation is the other factor here that's coming in. Is that shingles and other building materials have increased significantly since COVID. We've seen them come down a little bit, but they really haven't gone back to pre-COVID levels.
What about integrity of the materials themselves? Because what if my roof's only 15 years old, 20 years old? Like, I shouldn't have any problems, right?
Well, we've had so when we're having these roofing claims, Jared. So the biggest thing that we've seen coming from us, and what's making my job so hard, is that the industry, and I'll speak specifically to State Farm. So we're using aerial. You have that roof that's 15 years old. I'll give you an example. I had a customer whose house was built in 2004. He called the office looking for a homeowner's insurance quote. We wrote the policy. We said 2004. The roof looked good to us. We sent it to underwriting. Underwriting came back and said this is going to be declined based on the condition of the roof. We called the customer, said, we're going to need you to replace your roof, because there was some deterioration on a front portion of the roof. And he said, I'm not going to do that. There's no way I'm going to replace my roof. It's less than 20 years old, or it's 20 years old. Yeah. So he called back. I think it was 2 days later, he called back. He said, listen, I've gotten quotes from I've tried 6 other insurance companies that have been declined, and I've got a contract to replace that portion, the portion of the roof that had damage on it.
Right.
Which is just, to hear a 20-year-old roof needs to be replaced is absolutely crazy. But that's what we're seeing now. So we're using some technologies. We're using aerial pictures to take a look at your roof. And that's right when the underwriter gets that policy, they'll be able to see that. If they see any deterioration on that roof, then they're asking us to go back out and take pictures of the roof and make sure, the roof is in good condition. I would say that when we get to that point, 75% of them pass, but 25% of them don't. And
more than before.
Well, we did prior to October of last year. We didn't do any inspections on roofing, so it would have to be an older roof that had a lot of deterioration on it for us to decline that claim.
Interesting.
Yeah.
What's interesting? My father-in-law is a drone pilot, and
okay,
he's the one who he doesn't work for a specific company, but a third party where they, say, hey, we need you to do inspections on all these roofs. And they run it through the AI software. He showed me the reports, and they're crazy. Like, AI will just pick up every bit of damage, storm damage, holes, hail marks, all of that stuff. And you're like, just by looking at the roof, you never would have seen it. But when the AI gets in there and really scans those images, it's crazy what it's picking up.
It really is. Yeah, absolutely. Absolutely. And just there's some things that people can do. I mean, people in Connecticut have not, and I say people in Connecticut, we've never dealt with this issue. This is an industry-wide issue. I wouldn't put it past insurance companies that if your roof is older than 15 years old, that you're going to need a qualified inspection for us to write that roof with it, and I see that coming down the road fairly shortly. That's happening in other states. I know that in the state of Florida, that if you would like, that if for your homeowner's insurance policy, you need to have a roof that's updated every 10 years, which is absolutely incredible. And that's nuts. Through, and it's not in all areas of Florida, but if you're coastal, which most homes are, in those coastal counties, then that is that's the process that you have to go through, is replacing that roof every 10 years.
That's nuts. Now, I'm just going to play devil's advocate a little bit. I probably understand your perspective more than most, but I'm going to take the perspective of your average person off the street, right? So I don't understand what the problem is. I pay for insurance, so that they pay for these things when it comes up. And, I'm in the, I buy insurance because I want to make out. I want to make sure I get every cent out of my insurance, and that the insurance pays more than I've paid into it, right? And the insurance companies are huge companies, right? They got money. They got deep pockets. Why should I care about putting this claim in that I may or may not, if I can get a free roof out of it, why shouldn't I? Why shouldn't I get the free roof? Why shouldn't I, if someone breaks into my car, I'm going to put in the claim, even if it's, even a few dollars over deductible, right? Like, this is what I have insurance for. So what's the problem?
Yeah, so it's coming down to, I'll just say this: if there's a legitimate claim, then 100% put it in, because that is what you're paying for homeowners insurance for. Okay. Right? So if you have a legitimate claim, probably wouldn't put it in if it's $10 over my deductible, but I do think if you have a legitimate claim, put it in, and insurance companies should pay that. Okay? When you're looking at putting in a illegitimate claim or putting in too many claims, I think that you have to look at what the premiums you're paying are now. And if you'd like to keep those premiums and keep the policy affordable, then any level of fraud is going to just elevate those claims loss ratios. And that's going to hurt the market. We in the state of Connecticut, and we do not have issues like they have in Louisiana or Alabama, when they're, where they're taking, literally Louisiana's taking a 63% average rate increase on homeowners insurance.
And why is that?
storms, just the amount of storms that they're having, intense tornadoes coming through, hail damage. So that type of, just change in weather pattern, right, has really affected that. The average homeowner's premium in the state of Louisiana is upwards of $6,000, right? So the average homeowner's premium in the state of Connecticut's $1,925. So put that in perspective when you look at a house in Louisiana that is, it's a southern area. You probably have let's say your average house is worth $250 there, right? Our average house here is probably, $500,000, $700,000.
Yeah.
So that's a lot more insurance for a lot less dollar amount than what they're paying in Louisiana because of all the storms that they're having. And what it really comes down to, right, is if we have too many losses and our loss ratios are increasingly high, right? If we continue to have losses like that, our reassurance that we have to buy. So every time that you pay $1 into your homeowner's insurance premium, there's something they call a cat load, which is the amount of money that they have to pay for reassurance. Okay, so they'll take it out to Lloyd's of London and say, hey, if we pay out $25 million of damage on this storm, everything over $25 million, you guys are taking over. Right, and that's the way that the market works. Lloyd's of London would take that, and then they would pay those claims after the cat load is hit, and that number is upwards of it's probably $500 million instead of $50 million. But the reinsurance is getting more expensive. But what we're finding in states like Louisiana, the reason that those homeowners insurance premiums are going up so high is there's no competition. There is so many companies that have moved out of the state that will not write homeowners policies in coastal areas. In Connecticut, Allstate doesn't write their own homeowners insurance policies in the state. They do in most areas, but they don't write in Connecticut because they don't feel like they could be profitable here. And so in Connecticut we have coastal exposure, okay. So, in around 2010, the state of Connecticut came out and said that if you want to write homeowners in the state of Connecticut, you can't have a coastal restriction. Okay, we used to not be able to write 2,500 feet from the shore a home, and now that rule changed. I think 2010, and now you can write a home that sits right on the beach. And you have to write that if you want to write the home that's in infield, you have to write the home that's sitting on the beach in Madison, right? So a lot of players got out of the market at that point. Okay. And we're seeing more and more and more insurance companies in the state of Connecticut move out, right? So competition is becoming much less, right? So we haven't really had that happen since 2010, but it has happened post-COVID that we've had multiple insurance carriers that are just saying they're leaving the state. And that's creating problems. That's creating problems with competition. So when you think about, when you're thinking about putting in a homeowner's insurance claim, I think that you have to look at is it worth me, is the value that I'm going to receive from this claim going to be worth it for a possible rate increase that I'm going to take on in the future? And it might not be a rate increase based on losing a claim-free discount or losing a discount from a policy, but it might be from just a statewide rate increase that's going on.
Now, so to that point, I'm insured with State Farm, right? Let's say there's something that happens. I don't want to put in a claim because, I don't want my premiums to go up, right? And presumably if I put in a claim or too many claims, my premiums will go up, correct? Mm-hmm. Now, if my buddy has something happen and he puts in a claim, do my premiums go up? Like in the macro, like I understand not for that one claim but it's just, in the macro. Yeah.
Yeah. So just, if the loss ratios are exceeding, if the loss ratios are negative in any state, they're going to take a rate increase, and rate increases, I think that people have a misnomer of what the rate increase, what a rate increase is. A rate increase is, an insurance company just can't go and raise the rates. Insurance is regulated by the state of Connecticut. It's regulated by every state. Okay. So if we apply for a rate increase, then we have to present to the insurance department documentation and incredible amounts of documentation justifying why we need that rate. Why we need to take an extra 10% or an extra 5% to be profitable. The state of Connecticut is very, very. They don't reward rate increases very easily. They really have to be justified, so that because they want to see the market. They want to see players stay in the market. They want companies to be profitable. They want the citizens of the state have choices and not be paying exorbitant insurance premiums.
So my understanding is Connecticut's famous for being the insurance capital of as either the country or the world.
Yeah.
I'm not sure. But why is that? Like what makes Connecticut the insurance capital? I don't understand.
I don't know. I don't know what the draw was to Connecticut, but I don't know if there was some in Hartford, I don't know if there was some rules or something that made it easier to run insurance out of that state. But I know that the Hartford, the Travelers, Aetna, there's quite a few. I think Hartford Steam Boiler. I think there's just a lot of players, started at that, in Hartford. I think that's how we became the insurance capital of the world.
Okay, so it's just by volume of insurance companies.
Yeah, absolutely, okay. Absolutely.
Now, do you find that legislation is insurance friendly here? Like I know some of the stuff, like Connecticut requires you to have auto insurance and stuff like that. Mm-hmm. Do you find that people who live in Connecticut are more insured than other parts of the country, or no?
I don't know that we're more insured. I do think that the insurance department is they're definitely consumer. They lean towards the consumer, right? So, it is, like I said, it's very hard to get a rate increase here in Connecticut. Very hard. And it has to be justified. And I'd have to say it has to be justified in most states, but really in Connecticut, I think it is hard to get a rate increase. I think that as far as insured, I think that the majority of homes in Connecticut are insured. I think the values are very high, so people go ahead and protect that.
And so when you say rate increase, so presumably if the state determines the rate at which they have to insure something, mm-hmm. then what leads to competition or variation in pricing across companies?
Well, every company will have its own rating factors.
Okay.
So we might have a base rate that's lower than Amica's, right? Okay. So that's where that would come in with the rate increase, right? So that's where it comes with the rate increase.
Fair enough. So let's go a little deeper down, because I know there's a few other things that you talked about on Wednesday. Mm-hmm. So fill us in on that.
Okay. So as far as so my big thing right now is roofs, right?
Okay.
Like we've been going on roofs for quite a while. So I would make some recommendations to people, and that now we need to start cleaning our roofs, right? We need to make sure that we're keeping those up so that we can not replace it. It doesn't come to legislation where we're having to replace our roofs every 10 years. So I think that roofs are huge right now. We're going to start seeing, anybody who has a 3-tab shingle roof, I would pretty much guarantee that there's going to be non-renewal notices coming out on those roofs fairly soon. Okay. So I think the roofing industry is going to be booming here in Connecticut, for the long run, right? I talked a lot the other day about auto insurance, but that's a completely different animal.
Okay.
Right? That's a completely different animal. So let's kind of stay away from that.
Okay.
Yeah.
Let's talk about the mindset or the personality, because one of the things I run into, and this is gonna segue into condos specifically, right? Is I feel like the mentality or the way people think is, we talk about more natural disasters, economy's worse, inflation, things are difficult. After you did your little pitch on Wednesday, everybody's like doom and gloom, right? And that leads to increase in crime, and that leads to people getting desperate and trying to they don't want to have to pay for any more than they're already paying for. And so when they see a big profitable company with, the corporate execs flying jets from here to there and stuff like that, they're like, well, they've got enough money to cover this thing. Mm-hmm. And and we see this in the HOA space as well, where everybody always wants the other person to pay for it, right? They want the HOA to pay for it. They want the HOA's insurance to pay for it. They want their personal, whatever. They just don't want to have to pay for it themselves. And I think one of the things that I always have to reiterate and explain to people is that they are going to end up paying for it one way or the other, right? Because these insurance companies are in business to make money, right? So yes, if you have a catastrophic loss, I look at it like medical insurance, right? I lose money on medical insurance every year because I don't go to the doctor. I'm healthy, right? Why do I have it? Because if God forbid I crash my motorcycle, I'm not bankrupt, right? And it's it's there for catastrophic events to make it so the rest of my life is not ruined, right? And so I think one of the educational pieces is to start saying, hey, how are we using insurance? Insurance isn't for every little thing. It's for things that we're not going to be able to recover from. And I think insurance is kind of oversold because it's such an easy product to sell. Like every time I'm checking out at Home Depot, it's like, hey, do you want a protection policy on this? Do you want, you buy a car, you're like, hey, these are all the bad things that can happen, right? And we get oversold insurance, and it's just like, man, I'm paying insurance here, and I want to get my money back, right? Well, there's certain areas where it makes sense you're going to get your money back on it, but also understand that, like, you pay for your car warranty one time and you cash in on it and whatever, it's fine. It doesn't ding you in the future.
Right. Yep.
But when you put in these claims on your auto policy, on your homeowner's policy, on your master policy, and we're going to get into that in a second, your HO6, I think, is pennies on dollar, relatively speaking. But, your rates are going to go up and you're going to end up paying more in the long run. And I think this culture of just have the other guy pay for it, this mindset is amplifying this problem. And in 5, 10, 20 years, I can't imagine that insurance is going to become less and less affordable because of this behavior that they have to account for. And I wish it would be where the people who've been responsible with having insurance don't have to pay as much as those who are being irresponsible. And I think we do see that to some extent already, but still, everybody's rates are going up in Connecticut, not just because of my behavior, but because of my neighbor to the left and to the right and what they're doing, right? And so it's this, that's kind of where I wanted to go with it.
Yeah, absolutely. I mean, and we are seeing that. I mean, the companies are offering, we give a great claim-free discount, right? So if you are claim-free, we are trying to reward you for that.
Yeah.
We are trying to reward you for doing things like replacing your roof, replacing your furnace, replacing your electrical, trying to give you discounts on those things. I think there needs to just be a paradigm shift on what is an acceptable claim, right? Like what level. So we talked about hey, when you were playing devil's advocate, like, taking that $10, getting $10 from there, right? Yeah, you got to realize you're getting $10, but you're going to be paying that. You will be paying that back over years, right? So you're going to see a higher premium. So I just think that we need to be smarter as a whole on what kind of claims we're putting in, right? What can we take care of ourselves, right? So I think there's a lot of things that you can do to lower your insurance premiums, like taking higher deductibles, right? So that, and I know that we've spoke a lot about that with condo associations, right? So having your condo unit owners taking a larger deductible, having the association take a larger deductible on their policy, which I think really helps out a lot out there. So I think there's some ways that we can lower insurance premiums. But we all need to be a little bit more responsible with how we're putting claims in, or the reality is that it can't be socially acceptable that I can have a conversation. You know, I can't tell you how many people have come up to me and said, hey, you know, the insurance company put a new roof on my house, you know, and just so proud of that, right? You know, that's kind of odd that it's become socially acceptable that well, did you have damage? Well, I guess.
I got a new roof.
Right, I got a new roof, you know. Yeah. Like, I just don't know when that became acceptable, right? So I think that there needs to be that shift, right? So that when somebody says, hey, Jared, I got a new roof on my house, and you're like, wow, you know, did you have a legitimate claim, right? Yeah, did you need it, right? You know, when is that going to change, right? And when that changes, I think that a lot will change in the homeowners insurance market as well, right? So we'll get there, because I guarantee you that in states like California, where, you know, the only person that you're going to be able to get insurance from in 5 years is the state of California. Right. That if you said that out there, that someone would give you a dirty look, right? Right. You know, that would be different than the way it is here. But we just haven't experienced what we're experiencing now in the market. Yeah. That's really the biggest thing. Like, this is new for me. This is new for you. This is new for everybody.
And it's a combination of climate change plus better technology and policies to mitigate these risks.
Yeah, I think that what we're doing as far as like mitigating risk, I think that what we're doing as far as looking, you know, using the drones to look at your roof, I think, you know, going and doing a lot more inspections, you know, looking for, and then giving people, you know, credits for things that they're doing, like, you know, maybe putting a metal roof on their house or using gutter guards, just like small things like that, you know, giving people discounts for those things, that will slow down some of the claims that we're having, right? That will help out with a lot of what we're doing, but it's so expensive, right? It's so expensive. Could you imagine as a landlord having to put a new roof on your house every 20 years? Like, a lot of the profit you just made is gone, right? You know, and very simple and boom, just like that.
Just like that.
You know?
I'm going to share with you. So I don't know if I told you this story yet. So I've only discontinued working with 2 associations in our entire career. And up until January, it was 0. Like, we'd never had a client leave. And I had bittersweet feelings the first time it happened, because it was like, well, I can't say that anymore, that we've never parted ways with the client, right? Like, I pride myself in being able to meet everybody's needs. But ultimately, I talked to a few of my mentors, and it's like, well, why did you guys part ways? It was like, they weren't doing things the right way. They're like, then it's okay. Mm-hmm. You know, like, and so a few months after that, I had my second association that we parted ways with. And this one, you know, it's probably a little more direct in kind of how I handled this with the president. But basically, we'd gone out and gotten, the roof was 35 years old, 3-tab. Mm-hmm. When she brought me on, she was like, hey, listen, we're going to need to replace the roof. I said, okay, yeah. I look at him, I'm like, yeah, you need to replace the roofs, right? So over the course of the first 6 months, like, we start to get these leaks, and it's like, okay, like, yeah, we got to raise the dues. We got to get a loan. We got to get a roof. Mm-hmm. It's like, oh, but then these people can't, you know, she had a friend who couldn't afford to live there if we raised the dues. I'm like, I don't know what to tell you. Your roofs water's coming into your roofs. You know you need new roofs. So we're looking at taking loans, and they want to put it out over 15 years. I'm like, in 15 years, you're going to have 20 more things, you know, that come up, and now you're paying interest on this loan 10% over 15. Mm-hmm. You know, it's ridiculous, right? So we end up going, I finally like, let's get some bids. I talked to 3 different roofers. 2 of them I've worked before. One of them was a new, and they all came in within like $5,000 of each other, like to get on a $185,000 job, right? So for me to get 3 roofers who all I know are reputable, they're all, and one new one, right? And everybody's coming in, and they're all like within 180 to 185, that $5,000 range. I'm like, okay, the price is correct. Mm-hmm. This is what the roof's going to cost, right? Let's go get the loan. And she got hooked up with a storm chaser.
Okay.
And he gets up there and he starts banging around on the roofs and doing this and doing that. And she's like, you know, she basically signs an authorization for him to put in a claim on the insurance company. I'm like, what are you doing? I'm like, these roofs are 30 plus years old, 3-tab. It's insurance fraud. It's not a storm.
Right.
They're old roofs. And basically I'm like, these are the things that are going to happen. Either you get dinged for insurance fraud and they drop you, right? They just, and you might be personally liable, their board's liable for this stupidity. 2, they pay the claim and then they drop you anyways. Because as we're going to get into, master policies do not like paying claims, and they're losing money every year at the master policy level. So insurance companies are just not writing. And this was a specific item that the insurance was like, if this doesn't get fixed, we're going to drop it because the roofs are in such bad shape. So they know the roofs are in bad shape. Now, if they pay a claim on it, some auditor, someone's going to be reviewing this file down the line. And not only are they going to drop you, they might after the fact say, hey, this was fraudulent.
Yeah.
And then everybody's in trouble.
Right.
So I'm like, I'm not touching this with a 10-foot pole. If this is how you guys want to go, like whatever, but I can't be a part of this. And then, you know, best case scenario is they pay for the roof and your premiums just go up. I mean, best case scenario is your premiums go up, right? Right. Substantially, right? Because of the claim. It's a $200,000 claim or, you know, up to that, or they depreciate it. But even if they depreciate it, only pay you out $5-10 that's still the claim that you're going out on it's going. So they're like, well, any little bit. It's like, it doesn't matter. It's a claim. When they see this, they're going to drop you. Your rates are going to go up. And the problem is you're trying to protect your friend from paying higher dues. When the rates go up by 60% next year,
right,
your dues are going up.
Right.
Because you can barely afford it now, and they already went up by 35% this year.
Right.
So, you know, I tried to play it all out logically, right? And people get fixated on this one way of looking at the issue. And it's this mentality of, I don't want to say it's a scarcity mentality because I think that gets played out too much. But it's this mentality of, you know, we're going to do it for as cheap as possible and kick the can down the road. And I made a video about this recently. It's like, well, when you get to that point further down the road, things are probably going to be harder. The economy is going to be worse. Inflation is going to go up more. Insurance rates are going to be higher. It's going to be harder to get coverage. So now you're kicking the problem down to a place where it's going to be even harder to solve then. And you're going to be in a worse position.
Yeah, absolutely. Not to mention you got 10 unit owners that have water damage on their ceiling, right?
Yeah.
In their
units, and they all
right?
put claims on that too.
Yeah, absolutely. Absolutely. You know, I think that definitely that when we talk about a paradigm shift, that's it, man. I think that Connecticut homeowners, Connecticut business owners, you know, people who own properties in Connecticut will really see in the near future that if they're not seeing, they're not going to see, they won't even get to the rate increase. Their policy will be dropped, right?
Right.
Like if we keep on with this trajectory of continuing to put in claims and continuing to have to, you know, raise prices on things, that you're going to just see more and more people drop out of the state, more and more companies, and we're going to be dealing with substandard markets, which is not a good place to be.
Oh, it's 400% increase, right?
Yeah, absolutely. And then you're having, you know, you're getting crazy things like co-insurance that are coming in, you know, and just awful things like that. So I think that that we need is, you know, we really, really need to pay attention to what's going on, right? And make sure that we're doing the maintenance that we need to do, you know, for our properties. And I know that you're big on that, but I think that if you're educating the folks that you're working with about what insurance premiums are doing, it's nuts. You talk to any insurance person out there and they'll tell you the market is crazy right now. We cannot place products that we were able to place, you know, 2 months ago, right? Really? And it's nuts. And I'll call 2 other brokers and they'll tell me that they don't have a market for it.
Really?
Yeah, it is just really, I've never dealt with anything like this before. It is
Nobody wants to write.
Yeah, they don't want to write. And, you know, I used to be able to, if you called me and said, hey, I need a general liability policy for landscaping and snowplow, I'd say, no problem. I'll quote it. You come to the office, you sign. We could get everything done that day, right? And I'm talking maybe 3 months ago, okay?
Yeah.
That same policy today, when I write it, has to go to underwriting. It has to be, it has to be under it prior to. They want loss runs. They want to see 3 years of business. They want to see the contracts you have. They want to see all your additional insureds that you have on the policy. The amount of underwriting they're doing is absolutely incredible. And so we get through that, but then, you on your website have that that you dug a trench for a gas line at one point. And then, so they're doing the investigation on that, and they're going, oh, well, this guy is not a landscaper. He digs trenches for gas lights, so he's out, right? So like all of those factors are coming to play, but they didn't do that underwriting as aggressively as they are right now, because in reality, if I think that if you asked, someone at State Farm right now, and if you asked the CEO at State Farm right now if he cared if we wrote any business in Connecticut for the rest of the year, he'd probably say no. He'd probably say, yeah, it'd probably be better for us not to write any business because
you're losing money on it.
Yeah, because we're losing money on it, right?
So and you did allude to that. You said about how much you guys are losing money on your policies every year, and the only reason why State Farm is in business right now is because of what?
Well, so we've taken significant underwriting losses the last 2 years. Okay. Significant. But our financial, how do insurance companies make money? They invest money in the market, right? And the market's been good the last couple of years. So we've had substantial underwriting losses that have taken place. I do believe that we were profitable last year in 2023, but we were profitable because of market returns. And when that market, I hate to be doom and gloom, right? I'm doom and gloom that guy these days, but I do believe that when the market crashes, that it is not if, it's when this market crashes, there's going to be multiple companies that not only leave the state of Connecticut, but leave the industry as a whole, just because they cannot make money with the changes that we're experiencing now. Which is kind of it's scary in a sense. It really is absolutely very scary. And we're giving customers quotes on the auto side, and we're giving quotes to customers on the fire side that I would say I would be embarrassed to give those quotes, 2 years ago, and now I'm giving them to customers that are saying, "Yep, I'll take it," and it's mind blowing. Right, it is absolutely mind blowing. So hopefully this thing gets fixed, right, and hopefully it gets fixed quickly. But all signs are not turning to that right now. Yeah.
Okay. Now, briefly, let's just jump into HOAs and condos specifically. So I know State Farm does not write master policies, and for our viewers, right, in the HOA and condo space, which is what we make most of our content about. You have...
So we do write them, but...
You do?
We do, but we've priced ourselves out of it. Let's just say, right? I don't think they want to write them.
No, and most insurance companies don't.
Yeah.
There's very few that have an appetite for condos specifically. Just the exposure and the risk is nuts, especially in Connecticut where the law is such that basically master policy is primary in everything. So...
Right.
And if the HO6 policy adjuster knows what they're doing, they're going to push everything beyond a certain threshold to the master policy. And I don't want to give them more ammunition to do their job better because it hurts me. But, if they know the law and they're informed on the law, then it really all flows to the master policy. And the master policies are written as such, understanding that, right?
Yep.
But the amount of claims just with, I try to explain to people, developers are in the business of building places as cheaply as possible and selling them for as much as possible. And you can go back like 3 years, 5 years, 6 years, and that's it. Like beyond 5 years, it's like you're out of luck. If there's a defect or if there's an issue, so maybe you don't start seeing the roof issues for 8, 9, 10 years, but then they start happening.
Right.
You've got no recourse with the developer. Sometimes sooner than that, right? So the issue becomes that there's all this shoddy work, corners cut, all this stuff that now we're all paying the piper on, right, with these losses and claims and water coming in through the windows and rotted beams and all this stuff. that the insurance companies are having to pick up, especially the master policy, because the HO6 policies have limited exposure. So the solution in the HOA space is highest deductibles possible, like you were alluding to, right? Because the way it's written is the HO6 policy, and for those who don't know, or the HO3 if it's a standalone, means that the policy that's written on that individual unit has to cover up to the deductible. Now, a master policy premium can be $40,000, $60,000, $100,000 a year, right? Now, your HO6 premium, right, a unit owner's premium might be $400 a year.
For a deluxe policy.
For a deluxe policy, right? Like
absolutely.
All bells and whistles.
Absolutely.
And if you put a claim on it, maybe it'll go at $50.
Right.
For you.
Right. Let's say there's a 20% rate increase on $400. That's not much money, right?
Correct. Now, if it goes to the master policy and there's a 20% rate increase or a 30, it's actually at the master level, it's probably gonna be a 30 or 33% rate increase is what we're seeing. So that goes from a $50,000 policy to what? Well, let's say $60,000 up to a $80,000 policy, right? Sorry, math. Right, I should be better at it. So let's say you have a $60,000 a year premium. You put a big claim in, or even doesn't have to be that big. Maybe it's only a $20,000 claim, $30,000 claim, right? Now instead of paying $60,000 next year, you're paying $80,000 next year, and that in a 60-unit complex drives everybody's HOA dues up by that divided by 60, right?
Yeah.
So now everybody's paying $50, $60, $70 more a year just because of that one claim. Whereas if the HO6 policy paid for it, then one person would be paying $50 more.
Yeah.
Right?
Yeah.
And now everybody's paying more. So the strategy to mitigate this is say, okay, how much can we get onto the HO6 policy? And what we do is we say, hey, insurance company, what's the highest deductible you can give us? As long as I can save $1 or $2, I can justify it legally, right? They're like, okay, we'll raise it to a $25,000 deductible per unit for water losses. Great. How much do I save? $200. No problem. What it mitigates is that there's less claims going to the master policy.
Yeah, absolutely.
Because now instead of having a $5,000 deductible, so anything over $7,000 is going to master policy, now you're at a $50,000 deductible for the same loss, which means you have a much better shot at fixing the damage for less than $50,000.
I agree. And I think that there's so many advantages for you in that if State Farm is coming in and we have that condo policy, that individual condo policy for that individual who had damage in their unit, we know that your deductibles, your master policy deductible, $25,000 or $50,000, right? So that customer who owns that condo has their own contractor coming in. The master policy has nothing to do with that. They're picking their contractor. They're working with their own insurance company, their own agent to get that damage completed, right? Yeah. So for you, that's an advantage, right? For your insurance company, that's an advantage. For the customer, that's an advantage. And the difference in premium that they're paying is minimal. I mean, minimal. It's the way I talk about having a deluxe policy. I think we wrote one the other day that was like $150,000 in building coverage, and the premiums are $300, for the year. It's almost nothing,
with hotel stays and cash traffic, it's
they're super inexpensive policies, and putting that on the customer or putting that on the individual unit owner is such an advantage. And I guarantee you they will put less claims in on their policy than on yours.
Right.
Right?
Yeah, because they want the other guy to pay for it, always.
Exactly. So we're seeing a lot of that happening these days. And I love getting the letter from the from the homeowners association saying, hey, you need to increase your deductible, your building coverage to this number, right? That's such a beneficial thing because we can go ahead and make those changes in the policy so that customer's covered up to that amount to meet that deductible. It just makes life so much easier, keeps the claims off your master policy, provides additional little bit liability coverage for that customer. So if there's a liability claim that comes in, right, we haven't even talked about liability at all, right? If there's a liability claim that comes in, then they're going to be able to put that on their policy instead of, going directly to the master policy. So there's so many huge advantages to that.
Yeah, absolutely. And I think it makes the most sense at this time, right?
Absolutely.
So what we do now, and this is just to educate people who are in the same space and kind of how we work together, is we go to and we have a specialized agent who just deals with Bouvier, one of the biggest in Connecticut for condo policies, right? And they're do great. And they have the companies that really like to write in the condo space, Quincy, Vermont, Greater New York, all these, right? And so they are triaging that and they're saying, okay, great. We're helping you get the best master policy based on how your HOA is set up. This is the policy you want. All right. This company has the best kind of coverage for that, because not all policies are the same. Right. So they put us in the right product at the best price they can get us. And then they say, okay, these are the limits of your coverage. This is a letter for you to send to all your unit owners to call their insurance agent. Right. So now they give us the letter, which is what I've had on my board to work on for like 2 weeks now. And I got to get it done. Right. But we get these letters from Bouvier saying this is the policy limits. Give this to your insurance agent. And we say, hey, everybody, here's a letter from our master policy insurance. Make sure you have adequate coverage. Because a lot of people are like insured for $10,000. Yeah. And it's like, well, if it's a $50,000 deductible and you only have $10,000 of coverage, you're going to be on the hook for $40,000 when there's a claim because you flushed a tampon and your toilet overflowed.
Right.
Right? Like, it happens. We see that all the time. So we're saying, hey, here's this letter. Make sure your coverage limits, send this to your agent, make sure your coverage limits match this. And so what I'm going to start doing now is saying, hey, send this to your insurance agent. If you don't have an agent, check with Caleb over at State Farm in Middletown. They've got very competitive pricing for HO6 policies, right? That's our recommended vendor for this type of policy. And then you get the calls from them saying, hey, a lot of them probably have their own agents that they work with. But, let's say 5% don't or 10% don't. It's like, hey, we know that State Farm has really good HO6 coverage at competitive pricing, and they're, you're local, right?
Right. Absolutely.
And take care of them.
Right. And how many people have bought their unit 15 years ago, 20 years ago, they paid off their mortgage. The deductible, the master policy deductible, well, I think if they bought it 20 years ago, the game was different, right? Because rules were changed. But let's say that, they have that $10,000 in coverage because, that's all they needed, right? So we see it both ways. We see that quite a bit. And then we see the people who have, I had one guy that had like $550,000 on his condo policy because he needed to cover everything studs in. I said, no, that's not the way it works any longer. You got to, so the rules have changed. And I think it's all an educational process when it comes to that, and I'm sure you see that with condo unit owners all the time. When you're telling them, hey, you're responsible for paying the deductible. Yeah. They might look at that and think that's a huge number that they have to pay out, a huge number that they have to buy an insurance policy for, right? And it's fairly inexpensive. So
right. It's fairly inexpensive. And now, when you say studs in, were you talking about cabinetry and all that stuff, or were you talking about furniture?
I was talking about cabinetry.
Oh,
yeah.
High-end
drywall. Yeah, exactly.
Got it. Yeah. And the bigger and more, I would say not the bigger, the more levels the building, the sketchier it gets. Anytime you have units stacked over units,
yes,
it's like any little thing, like an overflowing toilet, becomes a big problem.
It does.
And then we have older buildings where, like, okay, well, now we know that there's 2% asbestos in all the joint compound. Like, okay, so now any little water loss is an asbestos abatement process.
Right.
And I'm calling Marie.
Yeah.
Right?
Absolutely.
Even though I don't want to, because I know she knows how much it costs, and they're gonna charge the insurance for it, and then my premiums are gonna go up.
Right. And that's like, talk about like another issue we see in Connecticut, like infrastructure. Like our infrastructure is old, right? Our buildings are old.
Yeah.
It's not like we're insuring things in Houston that just got built 5 years ago, right? We're insuring buildings from 1966, which we have no idea once we break into those walls what's behind those walls, right? So
and it's always something.
Always.
Like, I made a video on this. It's like every single complex, every single building has a major construction flaw. It's just, what is it for you guys? Like, I've got one that it's all the mechanicals are on exterior walls and they freeze every winter. I've got another one where it's like, you know, the first generation of PEX piping that is all coming apart because it's this.
Yeah.
I've got aluminum wiring or asbestos or whatever it is, or a combination of all of those. But it's like, man, every single one of these places has this thing, this you know, demon in the closet that when you buy the unit, you don't realize is there until there's an insurance claim and you're like, oh my God, this is a big deal.
Absolutely. I had one. I just actually had a customer call me and they were referred to us, and like I said, we're not in we're not a great condo market, you know, master policy. So we gave the quote to the customer and they loved it. So okay, well, there's got to be something going on here, right? Do they have a claim history? What's going on? So we get down there and every unit has stab lock breakers. Familiar?
Federal Pacific.
Yes, exactly. Which is a huge fire hazard, and I can't believe that they still have them in the unit. I've actually never seen them in person.
Yep.
So that was an interesting one. But you do see those things, right? You see those things all over all over the place in these older units.
Now, did you guys end up writing the policy, or did you?
No, we did not. We can't write stab lock. So.
Right. Well, that's what, So they thought they just got. I don't know any company
that can write stab lock. You know, and they were actually uninsured at the time, which we found out. Oh. So they were in, they were in a bad situation.
Yeah, they gotta replace all their electrical.
Absolutely.
It's
and they were working on that, and it was, you know, hundreds of thousands of dollars to get in there and replace all the boxes, you know. Yeah. And it wasn't a very big unit, you know. And that goes to, you know, just, and I'm sure you deal with this all the time, but you talk about increases. It's heartbreaking, right? Because people just cannot afford it. Telling somebody to put a new roof on a house, you know, at $60,000 is, I don't care where you stand financially, that's hard to do.
Yeah.
You know,
and you know, and that's why we make this content, to educate people and help people be aware of all the costs that they're not factoring in. And I may actually, there's a video of it. Are you following me on YouTube yet?
Not yet.
Okay. So you should.
Okay.
But the video I'm releasing tomorrow, it's Saturday, is all about how, you know, I can't afford the special. I can't afford my dues. What do I do? Right. And, you know, it's a little bit, it's direct, right? It's like, yeah, I get it, but you also can't afford not to.
Right.
And we all have to find a way, like, because simply saying I can't afford this isn't a viable solution when everybody in the association is depending on each other to make sure the place is safe and habitable for everybody, right? And it is heartbreaking. It's also it just has to be done, right? Like, I get it, but all these things are happening for a reason, and the solution to all of it is, and the message I'm always pushing is, we have to educate we have to go and seek out our own financial literacy and our own financial education and be prepared and like plan for these expenses ahead of time and put a little bit of money away every month for these rainy days or whatever, because it's just not in our culture. It's not in our society to do that stuff. And the result is either sooner or later, we're going to end up in the situation where this big thing comes up and we don't have the money to do it.
Right.
And it's like, my responsibility to my clients is to make sure that they never have to be in that position. So we try to be proactive. And then my responsibility, or what I feel my responsibility to viewers, is to let them know so that they are not blindsided by these things. Because if they live in a condo and they haven't had a special assessment yet, more likely than not, it's coming if they're not paying attention.
Right. Absolutely.
You know, and as a homeowner, with the homeowners you work with, if they're not, you know, putting that money away for major capital improvements, like, their siding's not going to last forever. The roof's not going to last forever. The windows aren't going to last forever. And usually we don't want to think about it until we have to do it. But we have to think about it years and decades before it comes due to be able to save up the money little by little and not have it be this huge painful thing when it comes up.
Yeah, absolutely. Absolutely. And that's, you know, and that's changed, right? Like that has just been one of the biggest changes with the inflation and the building costs, materials. That has just been really eye-opening, right? So not only for the homeowner, right, that they're replacing that roof at 60 grand, Now the insurance companies are replacing it at 60 grand, which, unfortunately we didn't anticipate that, right? And then the homeowners didn't anticipate it. Right.
Yeah. And so everybody's underfunded for their exposure now.
Yeah, absolutely.
Oh, well, it is what it is. But at the very least, we're going to put the positive spin on it. And the positive spin is, if you listen to this, now you know. And now you're better equipped and better armed to make better decisions. And you can expect it and maneuver and pivot and do whatever you have to do to insulate yourself and make the right moves now, and not get blindsided by this later on. Because as you alluded to on Wednesday, like the insurance market's going to change dramatically.
Changing dramatically.
It is
changing dramatically.
Yeah, and it's not going back.
And it's not going back in the immediate future.
Okay.
Right. I think that, let's say on the homeowners, on the property side, it's not going back. Hopefully on the auto side, we'll be back.
Okay.
We'll be back to pre-COVID, stuff. Exactly.
Okay. And is there anything else that you think is super important? Any other gems or, valuable nuggets that you're like, if I get off and if I end this and I didn't say this, I'm going to regret it.
Not really. I just think that more than anything, people need to educate themselves these days on exactly what are the trends. What are the trends in insurance? What do I need to look for? If I know that I need to just keep on going back to roofs because I deal with roofs more than anything. If I know that I need to get my, roof power washed every 2 years, then it's going to last, maybe it lasts 10 years longer and my insurance company loves me. I think there's things that you could do to take better care of your home, right? Power washing your home, power washing your roof. Those are things that you could do to make your home look better, and it will last longer, and you're gonna avoid having a claim in the future. I think that looking at things that for customers, we're always talking about looking at deductibles, right? So we talked about looking at deductibles on condo policies. I think looking at deductibles on your homeowners policies is a great idea. Take a little bit more of that risk yourself to bring down some of those premiums. I think that's the biggest thing. I think too, working with a professional, right? So we're going through and we're getting a lot of calls from customers that that haven't looked at their homeowners policy in a couple of years, and they're seeing that they're insured for, they're insured now for $400,000, but the reality is the replacement cost that we work up on this home, now that we've seen these increases in cost of building materials, is upwards of $650. So we're seeing a lot of people that are underinsured because they're doing things on their own. They're going online and just putting numbers in, and the computer's spitting something out, and nobody else is helping them out with it. So I just think educate yourself. Make sure that you have adequate coverage to cover your claims, and looking at deductibles is always a good idea.
Cool.
Yeah.
And now, do you just write in Connecticut, or?
I write in Connecticut and New York.
Okay.
Yeah.
So let's say we have a listener or viewer in Connecticut or New York. How do they get in touch with you? How do they find you?
They can call my office. My office number is 860-346-4442. Or you could always look me up on the web, just State Farm in Middletown, and I'll be the first person up there.
State Farm. That's good. And what's the address, just so?
401 Newfield Street in Middletown. So the old Bacon house, just a beautiful brick building.
Nice.
An old, beautiful brick building that needs a lot of maintenance all the time.
Do you guys own the building?
We do.
Okay.
Yeah.
So
yeah.
you're the one who knows how.
I do.
Yeah.
I do.
Okay.
A lot of work to that building.
Okay.
But,
I mean, it's beautiful. I see what you guys are doing with the landscaping wall in front and all that good stuff.
Yeah, absolutely. So yeah, it's pretty cool.
Nice. Awesome. Well, I know you're super busy. Thank you for taking the time to do this and be here. And, I'm sure that there's going to be at least a handful of people that really benefit from the stuff we talked about. So, thank you.
Absolutely. And when I come back, I'll have all positive news, right?
Okay.
Hopefully we break through this thing, and we're talking about how AI is
solved everyone.
mitigating rates and bringing things to be at an affordable level. So
Cool. Well, we'll check
Absolutely.
back in a year or so.
cool.
All right.
Thank you very much.
All right. Thank you. We'll catch you next time. Thanks again. This is Jared with HOA Crusades. We'll talk to you later.